right, glad to have you back. Now, 8 leading Nigerian banks, including Zenith, UBA, recorded a combined electronic banking income of 165.2 billion naira in the first quarter of 2025, maintaining growth despite increasing competition from fintech firms. The banks, Access Holdings, United Bank for Africa, Zenith, FBN Holdings, Stanbic IBTC, FCMB Group, Wema Bank, and GTCO posted a 22.3% increase in e-banking income. That's compared to 135.08 billion generated in Q1 of 2024. Now, this growth was driven by transactions across point of sales and structured supplementary service data, automated teller machines, and internet banking platforms. The expanding customer base contributed to higher fees and commissions. The rise in income comes as fintech companies such as Momo Payment Services Bank, Airtel Smart Cash, OPay, and PalmPay continue to offer zero charges on cash deposits and fund transfer, challenging traditional banks' revenue streams. Mr. Tajuddin Ibrahim is the director of the research and strategy at Chapel Hill, Denham. He is my guest. It's good to see you this Monday afternoon. Mr. Ibrahim, how are you today?
Thank you very much for having me on the show today.
Great. When I saw these figures, look so impressive to me. So we are spending so much. The banks are also making so much from e-transactions or e-banking platforms. How does this come to you? What do you think is really happening? Many of us don't even go to the banks anymore.
So it's largely to the changing developments that we currently are seeing in the banking sector, where most Nigerians are looking at convenience, they are looking at their comfort, they are also looking for an efficient way of doing banking transactions. And if you remember last year, the figure that was released by the authority indicated that electronic banking transactions in Nigeria hit over 1 quadrillion in 2024, 1.08 quadrillion specifically speaking. And this value of transaction is big when you look at it from a growth standpoint, considering that it represents 79% growth in 2024. So I would say that what we currently have seen in the first quarter of this year is a reflection of the big size of the value of transactions that occur in the banking sector when we talk about electronic banking. And it is also an indication that Nigerians continue to embrace efficient banking, easy way of doing transactions. And it is also an indication of what the future looks like, because I say it is an indication of what the future looks like because Nigeria is, forecast to be the third largest country in the world by 2075, with about 500 million people living in Nigeria. You can imagine if we do not have electronic way of doing transactions, you can imagine how cumbersome it would be for that huge population to be looking to do transactions in the banking hall. So all of those elements, in my view, are speaking to the development that we are seeing from a demographic standpoint and also from a technology perspective, considering that most of these banks have invested heavily in technology. So those are the aspects I believe, we should be viewing all of this development from.
Brilliant as always. I want to look at the fact that some would tell you that as smooth or easy as it is, some people or one or two persons might have also gotten into some issues. That's the challenges with tech. And, some people, being hacked, their accounts being tracked, or, all of those kind of issues. How well do you think the banks are building that firewall to avoid issues of fraud, issues of whatever sort of challenges around this tech advancement that we are seeing becoming a very potent trend across the banking sector?
The banks are building firewalls around themselves to protect customers database to protect also customer information by upgrading their banking, technology. So we last year, for instance, saw a couple of those banks upgrading their network to ensure that they avoid issues around bank or customer. I mean, they avoid issues around customer deposits, being attacked by, cyber criminals, and also a situation where unauthorized individuals or unauthorized people would have access to the accounts or the information of customers of the bank. So on the back of that, we saw huge investment in technology, by the major banks last year. And I think education of customers is another way that the banks are also, adopting to ensure that customers' information, do not leak to, scammers that would, result in financial, losses to them. Among all of those situations where banks, for instance, would, send text messages in some cases, put it on social media to let you know that even when you enter the banking hall, you can hear at the door where their machine will be speaking to you that the bank will never ask you for your PIN, they will never ask you for sensitive information. So beware of fraudsters. All of those elements in my mind are areas, are ways by which the banks are sensitizing customers to let them know that they should not give out sensitive information about them. Nevertheless, I recognize the fact that there could be network glitches. All of those network glitches are sometimes beyond the controls of the banks, and I reckon that some of the transactions that do not go through, but customers get debited, I reckon that all of those issues are resolved between customers and banks amicably. No doubt it may take some time for them to be resolved, but I noticed that the majority of them are resolved over time, particularly if they have to do with transactions that can easily be traced. There are identification numbers to each transaction that is carried out on the banking sector, on the platforms of banks, and I believe that these are some of the ways that they ensure there is recovery of any fund of customers that are lost in that process. So, to my mind, these are some of the ways that they are addressing, glitches in the sector.
Well, on the other hand, we could also see that some of these new banks, or I could call them new platforms now, the new platforms that most of them sprung up during the COVID-19 scenario. That's when we had all of those new banks coming. They are also offering some cheap services, like no charges on some transactions, no charges on some kind of payments and all of that. Some say this might one day, or as we move on, become threats, or it might become threats to the traditional banking system. Are you worried about that in any way? And how convinced are you about their services?
I think their services are here to stay. They are here to stay, and I think their services are making life a lot easier for Nigerians. And it is also an indication of the reason that the traditional banks have to really improve on their own services. And it is also an indication that at some point, I would not be surprised when we hear of mergers and acquisitions, when we hear of acquisition of fintech businesses by the traditional banks. And I think we currently are seeing some of that happening as we speak, because it is not that easy to start this fintech from scratch, but it could be relatively easy to acquire some of those fintechs as we speak, because it will just be a matter of what the right valuation is. When we talk about the fintech businesses, all of those new small banks not charging anything on deposits, not charging anything, on transactions. I think it is a signal to the traditional banks to see how they too can be a lot, more friendly to the customers, to their customers, particularly Nigerians in this case. When everyone really wants to protect their deposit in the banks, everyone really wants to see their savings, go higher in value in terms of the balances. No one really wants to be charged, for carrying out transactions. And I believe that these small banks see that as a way to penetrate into the banking sector. And my sense is that the traditional banks can learn a lot from that, either by considering over time bringing down their own transaction charges, that they impose on customers, or by even over time removing all of those charges to build their own competitiveness as well in the industry. I naturally speaking would bank with a bank that will not charge me when I do banking transactions. It means that they have to think out of the box to look for other ways of making money instead of charging customers excessively. I think those, to my mind, are some of the key takeaways for the traditional banks and what they can learn from the current, competitive landscape.
Would you think that inflation, which we've seen, my first conversation was all around inflation, but some say that has also, helped or made the banks increase the fees in some cases? We've seen hiking some prices of some transactions, some USSD transactions, and all of this. Some say inflation is also playing a role in this. Do you agree to that?
No doubt, inflation has a role to play, and banks really have to protect their earnings in that regard by considering some justifiable, and I say justifiable because not all increases in transaction charges, are justifiable. But when we have, justifiable increases, no doubt, businesses such as banks, naturally speaking, will be expected to pass those, cost pressures to customers. But the reality is that there should be, increases that customers can bear. There should be increases that will not make them lose customers. There should be increases that will not make them, lose customers to all of these new fintech businesses that are coming up. And I believe strongly that whatever the inflation number is, there are a lot of other ways that the banking sector can generate income to protect themselves from the impact of the high inflation environment. Because if they don't go beyond just implementing an increase, it means that over time they most likely will be losing customers. And what really matters when we talk about transactions is the size in terms of the volume of transaction. It is also the size in terms of the value of transaction. So when you have the volume and you have the value, you wouldn't really mind as a bank what you charge in terms of the percentage. It could be as low as 0.1%. When you have the value and the volume, you will still be good, and you will not be under pressure to pass inflationary increase to your customers. I think these are some of the ways that the traditional banks can win in the banking sector when we talk about payment services.
Indeed, reading through that report, I also saw that there's been a surge in digital activities, which has there's been a rapid tech spending with banks. They are spending more than they used to do. The likes of GT Bank, the likes of UBA, all of them are spending more to make sure that they're advancing technology across the board. But generally, what is your take with regards to the stability of Nigerian banks?
The stability of the Nigerian banks, comes from number one, an improvement in the regulatory environment. When we talk about the regulatory environment, we speak naturally to the central bank.
CBN.
And I want to believe that the central bank is, efficient in terms of the current, supervision of the banking sector. But nevertheless, no matter how efficient they look, there is always room for improvement. This is the reason that I think that the central bank has to be ready for the future of banking sector supervision. We have seen the current situation and we can say it is commendable, but what about the future? When we spoke about the future earlier on, I said that there are expectations that Nigeria will be the third largest economy by population in the entire world, with population of over 500 million. When we have 500 million people and we have at least about 50% of them or more that want to do banking transactions, it means that the regulator in that case has to be forward-looking by putting in place all of the tools that will ensure that the level of supervision does not drop in terms of the efficiency. The second element to my mind is how the banks themselves begin to brace up for what will come in terms of transaction value. Transaction value, I mean, we are talking about over 1 quadrillion in electronic transaction value in 2024 alone. If we see a similar growth rate this year, then banking sector, electronic transaction value most likely will be close to about 1.8 quadrillion, this year, when we end this year. What that means is that there must be solid platforms. When we talk about technology, there must be solid investments. When we talk about technology, there must be serious supervision of all of the networks of the banking sector to ensure that we have, number one, seamless transactions. Very important to all Nigerians, very important to all customers. Number two, there must be little or no loss of value for customers, because that is where you would see customers losing trust. And when you do banking and the level of trust that customers or Nigerians have in you as a bank is low, then you most likely over time are going to lose customers. So I think these are some of the areas that I believe the banking sector, from a player standpoint, in the banks in this case, from a regulator standpoint, the central bank in this case, can begin to look forward and prepare for what is to come over the next 10 years and even more, bearing in mind that the population most likely will continue to rise. It is unlikely to fall over time. And we are going to see a lot of economic activities leading to payments, the need for Nigerians to make payments, the need for Nigerians to do transactions within the country and also outside of Nigeria. There is need for them to brace up for all of those before they come.
Mr. Tajuddin Ibrahim, Director, Research and Strategy, Chapel Hill, Denham, thank you so much for your contributions to the program. We really appreciate this.
Thank you for having me on the show once again.
All right, then.